right. Greed works.
Hello everyone and welcome to episode 42, the episode that provides the answer to life, the universe, and everything of Let's Play Wall Street Raider. I'm RakeM, your host, and today we're going to continue our work on our stocks. We got all the way down to, somewhere down here, I guess down to Venfin, and we inexplicably skipped scripts, but we ended up looking at a bankruptcy that saw us gain a monopoly in 2 or 3 industries, and we've got to deal with it first. So that's what we're going to do. But before we get started on that, let's just recap where we are on our commodities. I currently have futures of oil that I have sold short it short in the high 130s, and it flirted with going back up, but now it's headed back down again. And also the stock index future, I bought it at 34.5 or somewhere around 34.6 or 34.8, and I was hoping that it would go up on April 4th when the bank issued its earnings report, but instead it's heading down. So rather than suffer any more losses on it, I'm going to go ahead and sell it off, because the antitrust suits for Berkshire Hathaway are about to hit, and he's probably going to suffer a drop in stock price as a result of those coming to court. Whether he settles them or not, his stock price is going to go down. So I'm going to go ahead and sell these off before we lose any more money. And when this drops, and as long as the bank's price doesn't go back up in the meantime, I'll go ahead and buy some more when this gets down to around 29,000. Okay, so I'm going to sell those off first, and I'll be right back, and we'll start taking care of those monopolies. Well, I got the majority of them sold off, but I kept some. And the ones that I kept all were 11 contracts or fewer. Well, I guess some of them were less, but they were all under 10 billion in this column, under the total current value. So they were the smallest of them. And the reason why I kept them was for 2 reasons. One, if for some reason the interest rate goes down, the stock index should go up right away, and we can make back on those that I still have left. We can make back what we lost on the others through those, and we'll buy some more as well. But I won't be forfeiting my commission that I paid on all those, and that was there was a lot of transactions there, so I won't have to repay for all of those to be reestablished later. So that's an additional percent that I saved myself. And then finally, they're just so small that if this goes down some more, it's not going to hurt me that much. So I went ahead and kept them. All right, so the thing that we have to deal with mainly is this bankruptcy that the bank has inherited of Allianz. And the reason why is because he has 100% of these 3 stocks, and we already have a near monopoly in these 2 industries. I don't think we have anything in the cable industry, but in the other 2 we do. Okay, here under Burger King we've got Darden, and the combined total of both of them is 71% of the market. And the other one, tobacco, we have Venfin, and combined we have a 52% here. Now, I don't have a problem if it was just British American tobacco, but this one for Burger King is a problem. So what we're going to do is we're going to have the insurance company buy off or sell off Burger King and take the profit from that and pay off its debt. Or I guess, I don't know, maybe it doesn't have debt. Let's look. Okay, so it's going to pay off its debt with that. And then we'll deal with the other two in a more conventional sense, because the Time Warner Cable, we don't have an interest in that industry. So we'll grow him up and make a bigger profit. And then what we'll do is we will have Allianz become a part of one of the other insurance companies. We'll liquidate it over there, because he has, or should have, tax loss carryovers that we would like to preserve, 48 billion worth. All right, so let's have him sell off Burger King, and then we'll go deal with Venfin. Okay, so now what we're going to do here is we're going to go ahead and have Venfin merge with British American Tobacco, and I don't know that we have the money to do that with outright, so let's see what we need. We need 17 plus another 34, so 20 billion to buy him, and 13 to pay off his debt, for a total of 33. And I know Venfin doesn't have that. Oops. So we need another 22 billion plus a cushion of 6, so 28 billion is what we need to give him. So that's what we're going to do. We're going to have Hartford give Venfin 28 billion. Alright, so now we're going to buy British American Tobacco from Allianz. We will liquidate him and pay off all the debt, and we'll keep this negative 10% as our growth rate, and we'll look to see if we have to reduce this R&D spending or not. And we'll probably leave the dividend at 0 since we're negative. Alright, so let's do that. Alright, we have a somewhat mediocre management, so we're going to leave the R&D just where it is, and we'll continue to grow at negative 10 until these rates go up. And if we get sued, we will not seek to settle it. We will go ahead and fight it out, and let the court decide what judgment needs to be made, because we don't have a significant enough difference between these two for it to matter that much. We should be able to prevail, or at least not have a judgment filed against us. Alright, so let's go back over to Allianz, who now has a lot of cash, and all the stock he has is Time Warner Cable. So Time Warner Cable has debt, and he's trading at twice his price. Now, I don't know what our tax cost basis is, so let's take a look at that too. Okay, so he's almost ready to sell based on the tax cost basis. But I mean, he has 37 billion in assets, and he is 42% of the industry. So what I want to do is I want to merge him in with either Irish, Zurich, or Tokyo, and I'm thinking Tokyo because he has the fewest stocks. And I just want to check Allianz has enough cash to pay off Time Warner Cable's debt, but I just want to see what Tokyo has. Okay, he's got plenty. So what we'll do is we will have the bank contribute Allianz to Tokyo, and then we'll liquidate Allianz. Alright, now we'll contribute cash to Time Warner Cable. He's going to need $25 billion. And here he is. Now he's got his stock price is not trading above his net worth anymore. So we've sort of reset the clock on him. And he's only bringing in 20 cents a share, so let's reduce the dividend also to 20 cents. In fact, let's make it 14. Now we got a good return rate. So let's change our growth rate to 0. And let's see what we want to do as far as the R&D goes. We're going to increase it to 12%. Okay, I think that's it as far as that problem bankruptcy goes. Now we have a lot more bankruptcies that we got to deal with, and we're going to go ahead and hit those first, and then we'll get back to this list, starting with Scripps, and then Venfin and Westmed. And that'll be it as far as all of our problem children. So we'll then go to the My Corporations list, and we'll look for ones whose earnings are going down, and we'll check these ones that are yellow to see if they have reached their target prices, etc. So starting with the bankruptcies, the bank now has 8 of them, and we're just going to go down in order by their size. So starting with Volvo. Alright, so here we have 36%. The industry's growing negative, and Volvo's down here, and he's trading at a really high price, so we're just going to sell him off. Alright, now USX, we've got Nucor Steel. He's got a huge market share, and we don't need to add to it, and the industry's growing negative, so we're just going to sell him off too. Alright, next up is disk drive. Here we have neck peripherals. And our return rate's not what we want it to be. And we can increase our market share, but he's trading at a high price. So I would much rather buy these little ones if we decide to expand here. But we really don't have the money to do it without giving him more. And I really don't want to do that right now. We're getting kind of close to running out of cash. And see how the index has gone up. Be interesting to see what happens with that come the end of April. Alright, so we're going to sell a disk drive off. Alright, Baker Hughes. Let's see. We are expanding a lot, and the returns are starting to go down. So let's buy him up. He's cheap, and we can reduce our growth rate as well, and reduce it to 16%. Looks like we've got the money to buy him without having to give him any, so. Alright, so let's just reduce our growth rate to 16%. and that'll do it. Alright, let's go back over to the bank. CBS. We have Warner Brothers here. And I think we're growing too much here too, but the return is still good. So let's see. He's got a lot of debt here. He'll go broke again if we don't do something about this. And we can pick him up pretty cheap for less than $1 billion. Let's see what Warner Brothers has. Okay, he's got plenty. So let's buy CBS and liquidate him and reduce our growth rate. What do you mean? Do I not own 100%? Oh, I only own 36. Okay, let's buy the rest. And we'll pay off the loan. And we have a few bonds to buy back. Alright, now as far as the growth rate goes, let's take it down to 4%. Earnings are still going up and we're very capable, so that should be all we need to do there. Alright. Rubbermaid. We have Amway there, I think. Yep. And we're not growing because the returns are going down. We don't need to complicate it any further. Let's go ahead and sell this one off. It's another steel industry. We got too much of a market share already, so let's sell him off. Brewer is up. That's good. Alright, Sunstrand. I took a look at this during my investigation of the bankruptcy that involved Allianz, because this is perfect prices for taking over the entire industry. The only problem is this industry doesn't have $2 trillion in it yet, and until it does, we can't withstand any major losses in terms of judgments for antitrust. So it's time for us to go ahead and have Goodrich start buying 19% of all these while these prices are low. And that way, when it does reach $2 trillion, we'll already have those bought for a much cheaper price. So based on whether or not we have the money to do it, we need to buy that 19% of each of these. Alright, so starting with Sunstrand here, let's take a look and see what he is worth. $1 billion, and it's $3 billion to pay off his debt. And here we have $80 billion to work with. So we can buy Sunstrand, liquidate him and pay off the debt. And now they're all declaring their earnings and ours are down. Hopefully theirs will be too. Alright, so let's start with Lockheed Martin here. His earnings are down. Matter of fact, he was negative last quarter. Alright, so 19% of him is going to be roughly $21 billion. And we have that. Alright, Litton's coming down, so let's give him a minute to come down some more. Alright, Boeing, 19% of him going to cost about 16. And apparently he's 100% owned by the bank, so we can't buy him. Alright, this one, 19%, cost about 3 trillion, maybe 3.5. Okay, we just took over AirTran, who used to be a market leader, but I don't know what percentage he holds now. Have to go look at that here in a minute. Alright, and now GM. Okay, we've got 46 billion left, and his price has come down to 118. So 19% would be about 35, 36, so we have that. So let's go ahead and get that 19% now while it's cheap. 37 is what it cost us. Alright, so now we own 19% of all of them except for Boeing. And I think we want to start growing negative here too. Bring up our returns. So I'm going to make this -3. Okay. That's all I want to do there. And our earnings are going to be down. There's nothing we can do about it. Nothing more we can do about it, I should say. We're going to get dividends on most of these. Okay, let's go back over to the bank and see about AirTran. Okay, this is not an issue because we don't have the 40% market share that we used to have. So he's trading awful high. Let's see what his equity is. Yeah, this is not. We can't buy him, not for that price. So we'll just have the bank sell him off. He'll probably go broke again. And that just leaves Alpha Beta. And we have Food Lion already there with big enough market share. And looks like people are growing like crazy. Let's see if I don't remember if we froze these guys or not. Doesn't look like it. Of course, they're running out of credit too, though. Out, almost out. Yeah, they're all almost out. All except for these bottom two, but they're already owned by somebody. And we might want to sell Safeway short. It'd only be 8 billion, so I won't bother. But I think we ought to just sell him off. There's no reason to keep him. Be nice if his management rating went up. Let's change this to 21%. Okay, our first antitrust is coming up against us for Berkshire Hathaway. Okay, Petróleo Brasileiro has filed an antitrust suit against us for $760 million. No, he didn't. It was $185 billion. That's weird. So yeah, I'll settle it for $300 million, sure, or $400 million. Well, that's not going to affect our price very much, I don't think. let's go to the bank and sell Ames off, and then we'll go take a look at him. Or excuse me, Alpha Beta. And we got to buy shares of Exxon too. Well, that was kind of weird. His stock price went up, but I was expecting 185 billion there. All right. It just tells us what the total is. It doesn't say individually. I guess we have to look at them one by one, wouldn't we? So let's go over look at PVR. Huh. Okay, well, I don't know who's up next, but whoever files, we'll go take a look. BP, I know, is soonest. 247 billion on him. Arco, 186 billion. Mobile, 204 billion. And Exxon, 217. I mean, I know I could go back to episode 40 and look it up and show it to you, but that's just weird. But I'll take it. I mean, it's a lot better for us. We're making money on the index transactions now. So that's surprising, really. Zurich's all the way up to 31 trillion. Okay, well, we're going to go over to our spreadsheet and continue working on these. We just have a few left, starting with Scripps. Scripps had a market share of 8% at the conclusion of episode 40. I haven't updated my spreadsheet since then, so it's probably a little higher now. Nope, it's still the same, 8.1. So let's see what we can do to increase it. Wow, we've got some bargains here. That's the only one that's unowned, though, is Time Warner. Let's see, that'd be 34%. He is losing money, and he's 100% public. So we'd need 12 plus another 2,400 to buy him. So 13.5 plus 20 to pay off his loan. So 34 billion plus a cushion of 3, so 37 billion. Well, we've got that. So let's give it to Scripps. Have him buy Time Warner. Let's cancel the swaps. Pay off the loan. Okay, now let's see what we need to do management-wise. We're very capable, so we can reduce this to 6%. We want to grow very little because our return is down, so we'll make this 1%, and we'll set our dividend to 70 cents. That helped a lot. So we'll go like that, and we'll see how it does. And he now has 33.6%. So that got them out of the green and into the pink. Alright, so VenFin we already dealt with. So WestMed is up and he's the last one. At least for now. It's got 15.4%. His earnings are going up. Abbott's sort of affordable, as is this one, but he's only 1%. By him, we'd have 45%. We wouldn't really be able to grow, but we could certainly make a good income. It's 32 billion plus another 32 billion. And he just made 32 cents, which was up from the previous quarter. And he's scheduled to make 71. So let's pick him up before he gets too expensive. If we have the money. We're running kind of low. We're running kind of low on money. Do I want to do it on credit? That's the question. I think so. We can afford it. So let's buy Abbott. Alright, now let's liquidate them and pay off the debt. Alright, we're growing at -4, which is fine. We'll want to get this down under 45% before we start growing at like 1% or whatever. And we've got our R&D set to 12, which is fine. So the only question is our dividend in line. 90 cents. And we're bringing in enough. Look at that, it's going to go way up. So let's set our dividend to 90 cents and then buy back those bonds. And do we have any swaps we need to cancel? Yes. Go. So that's it for him. Okay, next thing we need to do is just go through the my corporations list and hit all the ones that are losing money, or whose earnings, not losing money, but whose earnings are going down, and make any changes that we need to make to bring those earnings back up. Looks like the interest rate's falling and the index is going up. So is the GDP. So let's just start at the top and we'll work our way down. So Amway is going down. And here we are. Industry is improving. We're reasonably competent. Got plenty of money. Just, I guess our management rating slipped from very capable to reasonably competent. So let's put this back up to 8%, and let's increase our dividend too. Bringing in $3.74 a quarter, and we currently have it set at 90 cents. So let's make it $1.80. And the rest looks all right. Now it's going to take a little while for our income to go back up, but everybody is heading in the right direction. The industry is improving, so it'll go up eventually. Just a matter of time. Okay, Ann Taylor is up but sliding a bit. We're very capable, so we can decrease our R&D. That'll help. So we'll reduce this to 6. And do we need to freeze these guys? Looks like they're already frozen. Yeah. Okay, so I guess we'll just change our growth rate to 0. Alright, Scripps is up. That's about the best we can do. Let's see if we need to increase our dividend. Right now it's at 13 cents and our value is at 8, would be 18 cents, but we're bringing in 83, so let's set it to that, 83 cents. Because we've got too much cash already. And since we're not growing, all we're going to do is we're going to take that income and just stockpile it. So it's better to pay more of it out. Alright, Berkshire Hathaway income still going up, up. Alright, so Centacor is up but headed down. And we only have 17%. So we could add Zoma. Industry is deteriorating, right? Yep. Because of all those guys that are growing like crazy. I don't remember if we froze this group or not, so let's take a look. Okay, they're frozen and they still haven't come down. I'd love to buy Millennium again, but he's owned by somebody. He might go bankrupt though. He's got so much debt. He's got a profit, so if we offered to buy it for more than what he paid, he might take it. Let's see, who owns Centacor? Irish, and he doesn't have any cash. Oh, he does. Okay. Alright, how much is Millennium? So right now he's 14 billion, and if we offer 30%, that's going to be another 4,500, 4,600. So call it 18 billion. Wow, he bought some stocks that we sold off. I don't know that I want any of these either. Let's take a look at Whack and Hunt. We sold him and we didn't re-enter the industry. And he's bankrupt. Alright, let's not mess with Millennium. Let's see what the other one was. He's too high price. So I guess Zoma's the only one, really. I think we'll just wait. We'll wait for these guys to bring their growth rates down. We're reasonably competent, so we'll change our R&D to 8%, but otherwise I think we're just going to leave it until they bring their growth rates down. Alright. He's up, 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 but heading down. And Telefonica's way down. Of course, we knew he would be. Okay, so Delta Airlines is right here. We're spending a lot of money on R&D, and all these guys are growing like crazy. Now, I know we froze them, but there hasn't been enough time. We're grossly incompetent now. Alright, we're going to increase our R&D to 21%, and we're going to change the managers. And all these guys are too expensive to buy. So, that's what we're going to do. Okay, Dr. Pepper. And Pepsi's growing like crazy. He's got no money and no credit, but he's growing like crazy. We could buy Coca-Cola before he goes broke. Wouldn't call him a bargain, but he's affordable. And he's 100% public. No subsidiaries. So that would be $34 billion to buy him and $37 billion to pay off his debt. So what's that, 71? Okay, let's give 61 to Dr. Pepper because he's got 20 billion already. Venfin's negative for his first quarter as a combined company. We'll go and check that and make sure it's going up for the next quarter. Okay, BP, we already own him, I think. 19% of him, I mean. And this is a new entrant, so we got to buy 19% of him. Alright, let's buy back the bonds. And let's see what we want to do management-wise. So management-wise, we got 47%. So we can grow negative if we want to. I think we want to see what he does. We want to see what Pepsi does first. We're reasonably competent, so 8% is fine. Let's just change our growth rate to 1%. And we'll wait and see what Pepsi does before we do anything else. Okay, so let's buy 19% of ConocoPhillips. Let's increase our growth rate to 7%. That looks good. Okay, before we go any further down that list, let's turn the ticker on and set the ticker speed to 25. It'll mean more pop-ups, but we'll get more game time in. Alright, Dr. Pepper's up now. And still going up, so that's good. We just got Cadbury swept, so let's deal with it too. We don't want it. Let's just sell it off. Okay, so Eddie Bauer is next, and he's down. And he's down because of all these guys and growing so fast. And we froze all of them, they just haven't come down yet. And we put a huge dividend on him because he's got too much cash. But he's bringing in a lot of money, so it's going to be hard to get his earnings up from where they are. We're bringing in 21 and paying out 19, well 20. So we'll just live with that for right now. Enzo is up, down by a penny. I'm not going to worry about 1 penny. Up. All right, let's take a look at Food Lion. And oh yeah, he was incompetent. So we increased the R&D, and that's why he's down. If that turns around, then he'll be fine. All right, so Freebies is up, and actually we need to split him. Okay. Goodrich. We just bought a bunch of stock with his money. And his earnings are still going down, or his projection is, I guess. Growing negative, no dividend. Reasonably competent instead of capable, so we might want to increase this to 8, but nobody else is spending 6, so 6 should be enough. When does he declare? July 26th, so it'll be a while. Alright, Hanjin up but cresting. Again, we froze everybody. Just gotta wait for them to come down. Hartford is an insurance company, so his returns are irrelevant since we're not selling him. Okay. Flat, and we actually are gonna sell him when he reaches his target price. Let's see. He's got a ways to go. He's got too much money. Probably want to increase his dividend. Right now it's at 9 cents and he's making 39, so let's change his dividend to 40 cents. That should help our stock price. There's no other place to put his money right now except to buy new assets, and that'll just drag the returns down, so just go with that as it is right now. Alright, Intuit, earnings are going up. Irish doesn't matter. Komatsu going up. Going up. Going up. Up. Alright, Newmont Mining. Now he had a huge quarter because of money that he made on silver. So we sort of have to throw this one out. It's up from last year, so that's all that matters. Nico is going up, up. Okay, all these are good. Okay, so Panasonic. Now we just increased his growth rate and his dividend, and the industry is growing negative, and we froze all these guys too. The only one that really mattered was this one. But he has cash, so he can continue to grow at that rate for a little while. So we could reduce the growth rate. Let's see, we could buy this one this one, and this one. How much money does he have? Quite a bit, actually. So let's buy these little guys, and we'll probably want to reduce our growth rate by half down to 6. Brother's up. Alright, one more and we're done. Still have no loan. Let's take our growth rate down to 1%. Let's preserve this return for as long as we can, because if he doesn't come down for the next couple of quarters, it's going to drive our earnings down. So let's just grow at 1%. Okay. So Priceline is down. So let's go look at him. Got a ton of cash. And our stock price is horrible. Look at that, 45. What is it for next? Okay, so it's going up, but it's still down from last year. And that's one of the reasons. And we're mediocre. Industry's improving though. And the demand is going up, so, and most of these guys don't have much credit, and they know it because they're growing negative. So I think we just need to stay the course here. I don't think there's anything we really want to do right at this moment. Alright, so that was Priceline. So here we're good, and here we had a big month and now we're going down. Of course, we just merged him with Baker Hughes, and we're growing too much. So let's reduce this growth rate down to 8%. And we're mediocre. So let's just reduce our growth rate until our management rating comes up. That'll help. We're earning $1.68 and we're paying out 33 cents. So let's increase that as well. Let's make it $1.68. That'll help our stock price. Okay, here we're going up, up, down. So let's look at Shanghai. All these huge growth rates are the reason why, and our return is down. Industry's growing negative. Got a ton of cash, so we don't need to reduce our dividend. Reasonably competent. Alright, so did we freeze everybody in here or not? So here he has a AA rating. Let's see if he has credit. Yeah, he has credit. So either he's a new entry or we didn't freeze anybody. Yeah, he's BBB and he's 0. So we froze everybody, but there have been new additions here. And that'll continue to happen, which will bring down the returns too. So let's just reduce our growth rate to 1% and wait for everybody to come down, because they're either running out of, or they've been running out of credit, or we've frozen their credit. his earnings aren't down that much. So hopefully we'll bounce back next year. Alright, so here, up, 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 up. And this one is so negative it's not even worth bothering with. But he's only got 2.2% of the market, so it's not going to hurt us that much. He is up, but heading down, so let's take a look. Neck is up. Alright, so we've got a great, just a fantastic return. It's going to be hard to go up from that. And we're paying out 25%, so maybe that's a part of the problem. But no, he's got, he's got a whole bunch of cash. Okay, so here we're very capable. That's good. So basically we just, we have to come down. We were at our high point. There's just no way to make more money than what he's making. He hasn't reached his sale price yet. Let's see. Target price $47.35. Yeah, he's not even close. And this can't be accurate. Let's see what our... let me unhide the number of shares. Okay, so ST 30,000. Oh, that's what he's got. Let's see. Tax basis 235,948. All right, so his target price is still $39 after making the adjustment. And the reason why that came down is because we did an extraordinary dividend, which reduced Zurich's tax cost basis. 30, that still seems high. I guess we overpaid for him. Of course, I think this started out as a bankruptcy. Alright, well, there's just not much we can do for him, really. Thank goodness he's still up from last year. Okay, so going up, up. Alright, this one's edging down. Taiwan rubber. And should be going up, I would think. No, industry's deteriorating. So let's just lower our growth rate so that the industry is improving. Alright, I don't want to reduce it any more than that. What else can we do? Not a lot, really. We don't have any swaps to cancel, and our R&D is fine. We're bringing in 226 per quarter, which is well up over last year. So, nothing else I can do. Alright. Telefonica's down. Of course, we knew he was down. We're not concerned with what he's earning right now. We're more concerned about getting this industry up to $2 trillion in assets. So let me update this real quick. So he's got 25.4. And he has 340,858 in assets. So there's $1.341 trillion worth of assets there now. We just have 660 to go, and we can take this over. We can buy either all of China Mobile or just 19% of him. Let's see how much he costs. He would cost 140 billion plus 28 billion in premiums. So 168 plus another 140. So what's that? 308 billion? I think we gotta wait a little while before we make any more investments in that industry. Best Buy is up. Irish Life needs some more money, basically, is what it comes down to. And I think we need to change our growth rate to 0. Growth rate to 0, and let's see if these guys have credit or not. He doesn't. But he does, but not a lot. Less than $1 billion. They're the only two that are growing that matter. So let's eliminate our growth and just do R&D for now. We'll change it once our rating goes up, because right now, okay, we can reduce this to 8% then. He was in bad shape earlier. But let's make some money, and then between what he earns and what Irish Life earns, we'll buy up China Mobile or increase our growth rate again. Alright. So that's Telefonica. Okay, so here, Time Warner, we just got him and eliminated his debt, so this should go up. Alright, Tokyo doesn't matter. Trump is going up, up. Union Pacific. He made a bunch of money last quarter, and this quarter it's going down. It's still better than last year, though. And the negative return here is part of the problem. And we've got everybody frozen, but they haven't brought down their growth rates yet. So I think we just have to wait. Just have to wait until they reduce their growth rates. We got plenty of money. Got plenty of money. And we're paying out $2, which is 3/4 worth of income, so that we don't have additional stockpiling of cash because of our market share. We can't really grow, so. Alright, what else? United Health is up. VenFin is down. Of course, we had hoped that would be different. Let's see. And our return's going up a little bit. Reasonably competent now, so let's back off to 8%. That'll help. Rexall is up. Okay, we'll just keep doing this. Alright, so VenFin is there. Okay, so up, flat, up by a lot. Alright, Yamaha is up from last year but down from last quarter. And we just increased him to a 20% market share last episode or the episode before. We could buy Kawasaki, but he's not the problem. The real problem's right here, Bell. We froze him, but he hasn't run out of cash yet. So I think we ought to just wait. Because, I mean, yeah, we gotta wait. Let's see what our management... Okay, so we're capable. So we can reduce this to 6%, but other than that, I don't see anything that we want to do. And even that won't help a lot, but we don't have to go up a lot. Just have to go up a little bit. 83 cents. He made 80 cents last quarter. Oh, I'm looking, that's Bell. So 87 down from $1.13. and he made $1.04 the prior quarter. Okay, we definitely got to do better than that. We're mediocre. That's okay. So I was looking at the wrong one. So we got to re-increase this to back to 16%. Helps if you're looking at the right ones. We got no debt and got plenty of cash, so gotta wait for these guys to slow down their growth. We've frozen them all, so it's just going to take some time before they adjust. When they do, some of their stock prices will come down and we can pick them up. Alright, what was the one that was flat? Warner? And all this looks fine. We don't need to change anything here. We could bring our growth rate down, but we don't need to. The industry is improving. We're very capable. So, I think we're good. We're not perfect, but we're good. Alright, so the next thing that we need to do is go through each of the 5 insurance companies, split the ones that we need to split, and check and see if it's time to sell any of these. So that's what we're going to do next. Anyone whose stock price is above $60, we're going to split them, and then we'll compare to the tax cost to see if it's time to sell them. So let's go over to the tax cost basis report, and we'll start comparing numbers. Alright, so at first glance none of these are ready to sell. Best Buy is up, but he's not ready to sell yet. He'd have to get to 125. Enzo is up, but he has to get to about 460 billion, I mean. This one's close. You'd have to get up to like 120. That's it. So let's just go through and we'll split them. And in a couple of cases where their dividend is below 0.5%, we'll take a look and see if we need to adjust their dividend. So starting with Scripps, let's split him. Alright, so Best Buy. Let's take a look at his dividend. He's bringing in 82 cents a quarter, and he's worth 10. So let's increase this to 40 cents. Okay. Alright, next is Nortel. And WestMed. And Amway is the last one to split. Let's see if Enzo's dividend is correct or not. He's bringing in 83 cents. He's worth 18. So let's increase his dividend to 40 cents. And let's look at SoftBank too. He's bringing in $1.25. It's worth 13. So let's change his dividend to 60 cents. Okay. Alright, let's deal with these bankruptcies and then we'll move on to Hartford. So here, well, he's a bargain. Is Ann Taylor one of the ones that was super small? Yes. And And we're already at 239%. Who owns Ann Taylor? Okay. And the price has a long way to go. So the question is, do we want to buy Kohl's and give ourselves a 35% share of the market? He's got a great return. It's $1,600 to buy him and another $1,200 to pay off his debt. And we have that. So yeah, let's go ahead. Okay. Industry is still deteriorating because of all that growth. Let's increase our R&D to 8%. And I think we're going to have to reduce our dividend. We're bringing in 66 cents a quarter, paying out 83. Well, that's okay. Let's see, here's Ann Taylor. So we got 2-to-1 right now. And we're going to beat last year, so it's not so bad. As long as it goes up. And it'll only go up if these guys bring down their growth rates. So he's frozen. So I guess we froze them all. But they haven't brought down their rates yet. So we'll just have to wait them out, see what happens. Okay, Ericsson is in electrical equipment, and we've got Enzo here. It's only 1.5%. And situation's great here for us, except for the return on our stock. Why is Enzo lagging behind? He's reasonably competent. He's got the money. So let's buy him and merge him in. Alright, let's increase our R&D to 8%. And the rest is fine. Okay, let's go over to Hartford. Alright, so let's see. Anybody ready to sell? He's got another $50 billion to go. He's got another $50 billion to go. This one might be, this one's real close. He's got another $6 billion to go. Same here. He's got $6 or $7 billion to go. So quite a few that are close, but none that are ready. Alright, so let's start splitting some of these that need it. Starting with Taiwan Rubber. Okay, we got another notice for Berkshire, probably another antitrust. BP has filed a lawsuit for $157,563,000, but will settle for $63 billion. So we're going to say yes and just take the loss and pay the $63 billion. Because we're making enough money every quarter to afford it. And yes, our earnings will go down, but It's just the cost of doing business for owning 100% of the industry. We're still making money, as you can see. And his price has gone way up, and we will get that right here. So we gave him 63 billion, and we have 34 of it back. And that's just as of right now. If it goes up further, we'll get more back. Okay, there's 6 besides us, and that's what we've got. Okay, good. Alright, let's see. Where were we? Oh yeah, Hartford. Okay, Komatsu's up. That's good. Alright, so let's check on his dividend, actually. He's making 59. He's worth 24, and we've only got a dividend of 9 cents. So let's increase the dividend to 25. Okay. Get down to Brewer. We'll need to split him and increase his dividend. He's making 64 cents. He's worth 14. So let's make his dividend 30 cents. Let's look at United Health too. He's making $1.29. He's worth 22, and he's only paying 21. So let's increase his to 40 cents also. All right. Union Camp. We'll split him and we'll leave his dividend alone. Trump, we'll split him and look at his dividend. Bringing in 74, worth 13. So let's make his dividend 36 cents. Venfin doesn't have a dividend, but he's losing money. And we'll confirm that. Yep. And leave his dividend 0. Venfin doesn't need to be split. So Darden is next. And Standard, as we know, is not making money, he's losing money, so we'll leave him alone too. Alright, let's go over to the bank and deal with the bankruptcy. Okay, he's in transportation equipment, which we've been staying out of. Returns in here are pretty good, but it's just very small. He's got 12% of the industry, and he's only 4,500. So there's what? There's less than 50 billion in the industry. So let's just sell him off. All right, Irish Life. See if there's anything ready to sell in here. So no. Yes, but he hasn't reached his full potential. No, and no. So let's look at Leonard. His earnings are still going up. Let's pay off his loan. And got a good return, but this is bad as far as these growth rates are concerned. I think we already froze everybody though. Let's see, he's got an A credit rating. Oh, he's not frozen. I guess we could freeze all these guys. Maybe this is one of the ones where I said because the return was so good we weren't going to bother. Let's see, he would not have credit, so let's see, look at this one. Yeah, he's still got credit too. So we could freeze these guys, but our earnings are still going up, so I guess it doesn't matter. Made 39 and we're going to make 40. So we'll just let it go for now. Alright, so let's start by freezing SAB. His earnings are going up. It's bringing in 96. He's worth 16. And he's got a dividend of 80, so that's fine. Daewoo is bringing in 60. He's worth 20. And he's only paying out 12. So let's pay out 40 cents. Southern California Ed. He's bringing in 85. He's worth 14 and he's paying out $1.67. And that's fine because we got a ton of cash on this one. And his earnings are still going up. Alright, that's all the ones for Irish Life. Got them all split to where they're all between 30 and 60. Nobody's ready to sell but Leonard, and his earnings are still going up and he hasn't reached his maximum price yet. So we're going to hold off on him. Alright, Zurich. Not ready, not ready, not ready, not ready, not ready, not ready. He's almost ready. He's got another 250 billion to go. Not ready, not ready, not ready, and not ready. So none of them are ready. Alright, so let's just go through and split them and then verify that their dividends are where we want them to be. Here with Novartis. Alright, he's bringing in 91. He's worth 18. Let's give him a dividend of 50 cents. Sigma's, okay, fine, fine, fine. Let's see. Nico. Bringing in 93. Worth 12. And paying out $1.75. We must have a lot of cash. No, not really. Let's lower this to 90 cents. His earnings are going up though. Trump is up. Okay, Vulcan Materials. Got a big enough dividend on him for sure. Alright, so Goodrich has no dividend, so let's take a peek at him. Bringing in 36 cents. He's worth 36, but he doesn't have any dividend. Alright, let's give him a dividend of 36 cents. One last one to check is Intuit. Bringing in 53 cents. He's worth $9 and he's paying out 8 cents. So let's increase the dividend to 53 cents. That's a little bit more than I want. Let's cut it in half, make it 26. Alright, so that just leaves Tokyo. Alright, Nestle has no dividend. Bringing in 71 cents. He's worth 18. So let's give him a dividend of 40 cents. Nortel is up. Alright, not ready. Eddie Bauer is ready. And NEC, of course, is ready, but he's been ready for a long time. The only question is he at his peak? Not ready, not ready, not ready, not ready. Wait, this one might be ready. Hanjin. 14808 times 5. Yeah, he's ready. Okay. Eddie Bauer we're going to sell and not replace. What was the other one? NEC. Okay, him we're going to replace. Let's see, who else? That's it, right? Yeah, so those three are ready. Alright, so let's look at Eddie Bauer. Let's see, he's got some more room to go up. Question is he going up? No, he's not going up. He's going down. So, we might want to sell him now. We've made enough money off of him. Let's see. 3,449 times 5. So we're above it by almost $1 billion. Let's go ahead and get rid of him. Okay, Santa Fe's up. And NEC's only at 236 also. And his earnings are going down also. Well, they're up from last year though. He's mediocre. And everybody's growing like gangbusters. Let's increase our R&D by 2% to 14. And I guess that's it. We just need his return to go up. Our management rating will be the major factor in that process. Wow, look how high the index is. Got all the way up to 40. We're up to 26 here. I can exercise some options. Of course, the price isn't high enough for me to sell the stock and then buy it back. I would have to just sell the options off because the taxes would be so high, because my tax basis is like 9 to 1, 10 to 1. If I sold this, I'd pay, what is it? What is the interest rate now for individual? Still 18%? No, it's gone up to 22. So I have to pay 22% on anything I sold. I'd end up owing everything I sold off. I'd end up owing it in taxes. I'd have to wait for this stock price to go up to like 59, I think, 58, to really show any profit on it. I think what I'm going to do is sell off those options now. And take the $1 trillion off of those two. I'll wait on this one. See if the price goes up some more. Okay. All right, we've been going for a while now, and while we are not done by any stretch of the imagination, we have made a lot of progress. We've basically caught up on all of our maintenance and management responsibilities. So now it's a matter of getting all of these stocks to their target prices, selling them off, and we have a couple that we still need to sell, but they haven't reached their full potential, so we're going to hang on to them for a while longer. So when we come back next time, we'll turn the ticker on and we will get through some extra game time. The bank's earnings report is coming up, and hopefully it'll be up. And if it is, we will buy and sell some more percentage points of the bank, provided this goes up to the $50 level, which would put us up over 200 trillion and then some. So come back for that. But thanks for joining me. Hope you enjoyed the episode. If you did, please like and share. And until next time, this is RakeM saying, have a good one.